Hi traders, and welcome to my video on lower highs and lower lows. In this video I'm going to show you how you can use a simple strategy to capture moves such as this one for over 300 pips. Okay, this is a 1 hour Australian dollar US dollar chart. You can use this strategy on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. Personally, I like to focus on the 1 hour charts and above, like the 4 hour, daily, weekly, monthly, simply because they contain more price data, and thus I find trading signals tend to be more reliable, and that applies to price action analysis, candlestick patterns, technical indicators, so on and so forth. It also means less time chart watching, which is a bonus. Don't need to stress yourself out trying to get a few pips here and there when you can capture massive moves like this one. Okay. So lower highs, lower lows. Basically what this is an indication of a bearish market or a falling market, okay? So what we're going to do is we're going to look for lower highs and lower lows, but most importantly is where we look for them, okay? You see this here? This is an uptrend. So what I'm not going to do is I'm not going to be looking for lower highs and lower lows for a selling opportunity when the market is in an uptrend like this, okay? It could perhaps be used to help identify an exit point, okay? But the principles that we'll cover now for entry you can use if you are trading long, buying into an uptrend like this, you can still use the same principles, okay? So what we're going to do is we're going to look for a downtrend first, which we have here. Lovely downtrend, okay? There. Well, this is a huge trend, so there you go. Okay, you see that downtrend there, clear as day. Well, it is now. Obviously, when we were here, it wouldn't have been, but that's why we mark our resistance level. We see that prices come to this particular resistance level 1, 2, 3 times. Okay, so that's a triple top. After a triple top formation, we can expect a breakout to the downside. And like clockwork, after price continued up here from the prior trend. Okay, bounce off the trend line there. After these 3 levels of resistance, this big candle, no coincidence, that candle is a big bar downwards like that. The bears are starting to take over. Okay, the market drops, got a nice M pattern formed there on the chart and a breakout below the trend line. This is a bull trap. A bull trap being where traders are probably trying to buy into this trend, but they're just too late. They're buying near the high, which is something you definitely don't want to do. And their stop losses are getting taken out. Maybe traders who were in earlier down here somewhere are starting to exit their position, and this just causes big market movements downwards. And yeah, so it did actually happen initially here as well. Okay, you can see from that big candle there, people were exiting, panicking. But there was enough momentum just to push it up a little bit further. Perhaps some people arriving late to the party, but when we see this now, we're expecting, okay, the market is going to finally fall, and that is confirmed by our lower highs. Okay. So you could enter on this breakout there, even the breakout and the pullback. After this resistance level 1, 2, and then 3 here, you can see from these bearish candlestick patterns here. It's only just a matter of time before the trend went in the opposite direction. Okay, you've got your levels of support and resistance you could be using as well. You can see this level of support here. Tested. And once price breached through it, it actually became resistance. Okay. That was around here and here. Yeah, nice shooting star, bearish pattern there, or inverted hammer if you like, all indicating downwards again are lower highs. This is all signals that, okay, this is what we were expecting. Okay, we did all our analysis up here. We kind of knew what was on the horizon and it happened. So where does the lower highs and lower lows come into play? This can be used for timing your entry, okay, and just to make sure that the trend is still an established downtrend. Okay, so you've got your lower highs here. Okay, your lower lows. Clear as day, the market's downwards. It's formed this channel. And yeah, you just basically trade in. You can trade with the trend, and the trend is your friend. You capture some big moves, So lower lows, lower highs. I mean, I've drawn them like that. There are some traders who will say, okay, well, they've got to be consecutive candles. That's fair enough, each to their own. If you want to be that pedantic about it, we can always just say, okay, well then, you know, they're lower highs here. See the highs of these candles, they're all lower. So that's lower highs. See the lows, they're all low. So that's lower lows. Okay, we know we're trending. The thing is, you need to time your entry, okay? It's no good just seeing, you know, here, great, lower highs and all lower lows. Low, 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 okay? Here, lower high, lower high, lower high, lower high. Here, lower low, lower low, lower low, lower low. Okay. So what we do is we time our entry. Well, this is what I would do based on support and resistance. Okay, I'm not going to use the unicorn magic crystal ball indicator. That doesn't exist. I'm going to use price action because I find this to be the most effective. I don't want a lagging or repainted indicator. Why would I do that when I can just look at the chart myself? See the nice wedge formation here. Okay, this level of support. It's held up well from all the way back here. Probably goes back further than that even. Okay, but we can see its support here was tested there. Even resistance around here. But it's held up well recently there and there. But now that we have this downwards momentum, we have the lower highs and the lower lows, we can enter on the breakout, which happens around here. And it's no coincidence this level of support then becomes resistance. So we could have entered on the initial breakout, or you could have waited for the pullback. Just bear in mind that the pullback won't always occur as perfect as that, and it might not even reach this line if you were going to use the support come resistance for entry. But if you did want to wait for a pullback, you can always just do another level of support. As you can see from this big down candle here, there's probably a few traders doing that, waiting for this trend to form. They didn't want to risk getting in up here just in case price continued moving upwards or consolidated for longer. Wait for the breakout, get the pullback and trade on the breakout, the second breakout there. Okay, again, market is making lower highs and lower lows. That's a downtrend, so we're not looking to buy. We're going to look for sell trades and we're going to time our entry. Okay, lower highs. Okay, lower lows. We could have traded that breakout there, or we could have just looked at this obvious level of support here. Okay, so what you don't want to do is sell at the bottom of the move. Okay, so you don't want to sell around here after this move. You probably don't want to sell after these big candles. You want to wait for a pullback. So we have our pullback here. Price starts making lower highs, lower lows. Got our support level, trade on the breakout, and look at that candle there. That is looks like an NFP, non-farms payroll, first Friday of the month candle. Nonetheless, we could have jumped in on that momentum and taken us into this trade at a favorable entry. Okay, and if we zoom out, the good thing about this is why I try to reiterate to trade on the 1 hour charts and above is because this is over the space of what, 2 to 3 weeks. If you would have entered, let's just say you didn't get in straight away. Okay, you waited for the trend to form. We traded this breakout here. Okay, could have been over 300 pips and counting now on this trade. And I mean, trying to get 300 pips on the 1 minute, 5 minute, or 15-minute charts, stressing yourself out day trading is not easy, in my humble opinion. I'd much rather try to catch a big move like this, even if we're wrong. You know, some of the times, as long as we cut our losing trade short and let winning trades run, should be okay in the long run. For example, if we entered this trade on the breakout there and had the stop loss just above the recent high, what's that? 15 pips. And I mean, 15 pips on a 1 hour chart is nothing really. That's a relatively tight stop loss, especially when you've got over 300 pips of profit potential. You know, even if you got the breakout wrong or the entry, whatever entry criteria you're using, if you got it wrong, you know, 2-3 times in a row, when you do eventually get it right, maximize the move and you can make back the losses and then some. So just reiterating the importance of good money management principles, something that is often overlooked. Okay, I see traders using like a take profit of, I don't know, 10 pips and a stop loss of 100 pips. I mean, that's, you know, one bad trade is just going to wipe out 10 winners, not to mention brokers, costs, spreads, commission fees. But enough waffling, back onto this trade. So you take the entry on the breakout, stop loss above the high. Then as price falls, what we can do is we can use a trailing stop. Okay, so what we don't want to do is for price to fall down here, and if it just rises back up, it takes us out our stop loss. We don't want to let a winning trade turn into a losing one. So as price is falling, we can just move the stop loss above the highs, okay? So initial stop loss would be here. After price drops down around here, we can put our stop loss at break even. And when it drops again, our stop loss above this high. When it drops again above this high. When it drops again above this high. When it drops again above this high. Drops again above this high. Drops again above this high. I'm going to say again, drops again above this high. I'm going to say again, drops again above this high, drops again. So our stop loss, we could have our stop loss around here and be locked into this trade for, what's that, 300 pips, okay? Based on trading lower highs and lower lows. Not using a magical indicator, just price action, support resistance, trend lines, and good money management principles. Okay, what I wouldn't do is have a fixed risk reward ratio where I say, okay, my risk to reward ratio is 3 to 1. So if my stop loss is 15 pips, I've got to have a 45 pip take profit, and then I'm gonna run. I might, round off the 50 pips for broker commission and potential spread. But if we did that in this instance, 15 pips stop loss, okay, got really excited. Oh, 50 pips profit here, exit the trade. I mean, if you did that, you're just leaving way too much on the table. Once you're in a good position, why not try to make the most of it? Do you know what I mean? Granted, you can close part of the position if you want, or but yeah, trailing stop for me can maximize the moves. One thing it's worth mentioning as well is if you don't get in on the initial entry, as long as there's still the lower highs and the lower lows, again, as we did here, just draw your support level and you can trade breakouts in line with the overall trend. See this level of support? Support holds up. Support then becomes resistance. No coincidence. Price drops again. You have a 3 inside down bearish candlestick pattern there. I've got lots of videos on candlestick patterns you can check out. Okay, we've obviously got our lower highs, got our lower lows, and we're just trend trading. Simple as that. Okay. No smoke and mirrors, no BS indicators, just normal price action trading. Okay. Hopefully that's given you an idea of lower lows and lower highs and the different ways you can implement them within your trading strategy. Just to recap, look for a downtrend. So because we're going to sell, lower highs, lower lows, markets going down. And we're just timing our entry. Okay. Hopefully you found something useful in this video. If you could please like and subscribe, that will be great. And I hope to catch you on the next one. Thanks for watching.